Good morning. Thank you for tuning in to another pre-market pulse scan for trading on Tuesday, December the 6th, 2016. First of all, I want to welcome all of the new premium trading room subscribers to the weekly post wave price triggers. Your life will never be the same again. This is one of the greatest decisions that you will ever make, and you have a long road ahead of you, but hopefully, prayerfully, that has been cut short because all the hard work I've already done for you. All you have to do is learn how to read the weekly pulse wave price triggers and execute the orders correctly and efficiently, excuse me, and consistently. Looking at today's pulse wave price triggers, I always like to start with the alerts first, starting with the 911s, the 411s, the 311s, the 11s, the 40s, and the 78s. If you have not already done so at the time that you subscribed, even after the fact, you just have to go and look at your emails. You should have received an email with about 5 or 6 different PDF attachments. In one of the PDF attachments, I believe it's called Legends, that breaks down the alerts of the post wave price trigger so that you'll know what each alert means. You'll know a 911 from a 40. You'll know what each one of those means and those certain, different setups. And in the ongoing trading material, you will also see that there as well. All right, let's keep it moving. Today's rally alerts or 911 alerts under the positive momentum column, we only have a handful. We have um, the 20-year Treasury Bear Inverse ETF TMV, which means that we need to look and see what else is on this column. Well, if you look at the TMV, that's T as in Tom, M as in Mary, V as in Victor, you see a rally alert, also followed by under the uptrend column, excuse me, there is a 70 reading. A 70 reading means that this market is locked in on the bull side. It's in a bull market, according to the algos. And so you would do well to be taking a look at long entries. We know that this is in play strongly because look at the closing price in relation to your post wave price trigger. All right. So this is a really good one to take a look at. Also, let me make a note here too. The recommended stop loss under your sell stop column, you know, I know sometimes you may be, get a little shook because you'll look at how wide some of these stops may be. As you learn to trust the system, you will realize that those stops are there for a reason. Rather than putting no stop loss at all, sometimes the stops are wide, but you need to get into the mindset of placing these stop losses. A stop loss is your best friend. In times of catastrophic uncertainty, a stop loss will take you out with as minimum damage as possible before things get too ugly. If you don't have a stop loss in place, there are times where you won't be able to get out of a position where you should. So that's what the stop losses are there for. Be a robot, learn to place those stops, and don't touch them until it's time to do so. We do not widen stops while we're in positions. We only move stops up to trail positions. We never move the stop backwards. We always attempt to lock in profit along the way. Okay, so moving on. Dust has a rally alert now. If you look at the closing price in relation to this morning's post wave price trigger, you'll see that this one is also in play. Notice though on the excuse me, under the negative momentum column, there's a 311. So we have a swing trade alert. A 311 swing trade alert is your tertiary signal as far as powerful signals, because it tells you that the momentum is locked in with a positive or negative swing VIX. In this case, it's a negative swing VIX. All right, so you can't ignore that. All right, swing VIX is basically, in a nutshell, is a cog of, how can I say this, algos that look at the price action and take certain measurement readings of it. So regardless of whether it's an up or down candle or bar, it looks at the price action as a whole and determines the positive and or negative momentum within that bar. And then it gives you a reading. And then it measures and sees if the momentum is also locked in, things like that. So based on the videos that you see me do when I explain momentum and I talk about momentum and I use that blue momentum price action line, that's showing you some things. Again, I'm using basic general indicators that are standard with any charting packets to try to explain what the algos are saying in this video. All right. Okay, the next one is Gush. That's your that's your 3X ETF, another one. You'll notice on the in-play tab, there are a lot of 3X ETFs. There are also a couple double ETFs on there too, but I like the 3X because they're good for these 3 to 5 day moves. You can hold them for 3 to 5 days and get out. Most trends in the market now last about 3 to 5 days, or I should say 3 to 5 bars, whether that be daily bars or weekly bars. That's an average. All right, so an average is 3 to 5 days. I'm not saying that that's set in stone and every trade you put on, you're going to be in it for 3 to 5 days. No, it's just saying that's the average. Some trades work out longer, some even shorter. All right, we live in a new market environment where some trends only last intraday, and that's it, or a couple of hours, and that's it. It just depends on the nature of the beast. So in this situation, for our intents purposes, on Gush, it's locked in on the bull side. We have no negative momentum readings, which is good. And it's in play, but it's more of a watch because it's based on the relation of the closing price to today's pulse wave. You got some distance between you. All right, looking at dry ships. Still watching this one. This one really still has not recovered. This one has not recovered from rallying up to the $80 level. Now we're down at $4, okay? Like instantaneously. Whatever caused that volatility is pretty much ceased. It's dead. There's nothing happening. All right, the market's still at the $4 mark, and there's no recovery yet. We have a rally alert to see if the market can get some kind of momentum going on, but we still got negative momentum locked in. You look at the 11 under the negative momentum column, it's still locked in on the downside of things. Also, you're in a what I would say a weak downtrend because you have an 18 in the downtrend column. 18 means up or downtrend, but we call it weak per se because it's not followed by excuse me. It's not being followed by a powerful signal. So in other words, an 18 is saying that the trend is locked in on one side, but it's a weak trend because it's not a 70. 70 is your powerful locked in trends. 18 is just a normal trend, and a 52 is a retracement, all right, of a trend. So that's what you're looking at on the up and down trend side. So this dry ships, it's really not in play because if anything, you'll be shorting it. And the rule about shorting stocks below five, really $10, I would say. Shorting stocks below $10 is a no-no, especially below $5. If anything, this will be a buy and a hold below $5. But I don't believe in buy and hold except for mining shares. You can buy and hold mining shares because of the nature of those stocks, unlike any other stock. All right, so those are different, and you still need to even do those within reason. All right, excuse me. Buy my throat. Excuse me. All right, let's move on to hack. All right, hack is still playing around that $27, $28 handle. You see it has a 911 on the rally side of things, so you have a rally alert based on where yesterday's close was in relation to the today's pulse wave price trigger. It's in play. All right, it has a little bit of movement to go, but it's in play. Look under the uptrend column. You have a 52. That's a retracement. That means that this market is in a overall bullish position, but it's been in retracement from that bullish position. Look at the 18 under the downtrend column. That 18 signifies that the downside is locked in. All right, it's in retracement. It's been falling from the highs. You're still in an overall bullish picture, but it's been retracing. Now this 18 can become a 70 real quick. If it becomes a 70, then that means we're no longer in a bull market, and that means the bull market has retraced 100% and it's turned into a bear market. Also, look at that 11 under the negative momentum column. That means the negative side, the negative momentum is locked in. So this one is one of those where you're either going to be shorting it or you're going to be going long. But we all know what a breakout above 28 means. It means red alert. It means that something cyber wicked cometh. All right, let's look at the next one. GameStop, my favorite store in the world. I'm a prolific gamer. I go way back to the handheld tick football games that go tick 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 on the screen back in the 70s. I know I'm dating myself, but that's how far I go back as far as handheld video games. I'm a handheld video game nut. I've had just about every handheld gaming system that they've ever come out with, and I love the PS Vita. The reason why I like the PS Vita is because of the remote play with the PlayStation 4. It is the perfect game controller for the PlayStation 4. I love it. I could play anywhere in the house, and it's just awesome. All right, and yes, I said it. All right, I'm an old head who loves handheld video games way more than console. The console just serves its purpose because I can see it on the screen, on the handheld screen. That's what I like. That's what I do. That's how I relieve stress and relax myself every day, as much as I can, as often as possible. All right, looking at GameStop, it is definitely in play. You see your situation is such. Let's break down the bar. Okay, you have a rally alert under the positive momentum side. You have an 18, so you're in an uptrend, but you have a 52 in the downtrend column, which means we're in a bullish retracement off of the bear market. And we have a 311 of the negative momentum column. So we have a swing trade alert inside of a rally alert. This one is very interesting, to say the least. Also, the market is negative pulse waving. It's not positive pulse wave. It's in a negative pulse wave. So this one is looking interesting. It's definitely at a crossroads. Is it going to continue to retrace to the point where it turns bullish and that 18 turns into a 70 and locks in? Or are we going to peter out and then that 52 becomes an 18, becomes a 70? So one of these columns, uptrend or downtrend, is going to eventually become a 70. Who's going to win out? You got two possible scenarios. And looking at where we closed, both of these are arguably are in play. So what's going to happen? Is it going to trigger the long first and then head fake everyone and then trigger that sell short reversal? We don't know yet. But this is definitely an interesting one for today. All right, looking at the Ultra Russell. This one is definitely in play. The bullish side is locked in for a rally alert. but you got a 40 under the negative momentum column, which means that you just have a negative swing VIX. So that means you had a pullback in this market, and this is a situation where this market could rally from that. So this is definitely one to watch on the upside. And then we got the TQQ, which is the Ultra NASDAQ 100. It's the 3X situation. And again, this one's looking like GameStop because you have a rally alert, and it's in play, but not necessarily. You're going to have to watch it based on where we close and where the entry price is. You got an 18, so you have an uptrend, but you got a 52 in the downtrend column, which is a retracement. So you're in a retracement from a bear market, algorithmically speaking, and you have a 311 under your negative momentum column. So you have a swing trade position. So this is also looking interesting. It's either going to break out or break down. I don't see it breaking down because look where we close and look where today's price trigger is located. All right, so I don't think that has a chance of doing anything unless the stock market just crashes and burns today. All right, so that's where we are on that. As far as our swing trade in signals, we have the following: USLV, FAS, the most popular JNUG, and we have FedEx, we have the inverse dollar, the UDN, we have ULE for the euro, we have DIG for crude oil, AGQ for silver, which is an interesting one, and we have SQQQ. So we're still holding on the SQQQ, and we're going to see what happens on this one. Let's talk about JNUG real quick. JNUG is absolutely positively in play. It is in play. I'm going to make sure I have my tickets ready because this one is looking interesting. Let's break down the line. All right, you see you have a 311 on your positive momentum. That is a swing trade where we have a positive swing VIX inside of a locked in positive momentum bar. Look at the market is not pulse waving positive, it's pulse waving negative, but look at the potential for an upside breakout on this one. Look at where we closed, look at where the price trigger is. It looks very sexy. On the other side, on the downtrend column, we have a locked in 70 downtrend. It's locked in on the downtrend side. Negative momentum is a 78, which just tells you that there's no other momentum gauge for this. It's basically run out. It's not locked in from a momentum perspective on your negative side. It has a 78, which just means that it's in a negative pulse wave. It's pulse waving negative, but it may have run out of downside momentum because a 78 is your last alert before a 0, which means absolutely nothing's happening on that side of things. So there's nothing happening other than it's in a negative pulse wave position, but it's running out of momentum. So this one is probably perched and ready and primed for a reversal. So just like in the video last night when I showed you the GDX and GDXJ, well, this JNUG is definitely going to get a lift if GDXJ gets a lift. So definitely watch GDXJ as well to see whatever cues we may get from that. Definitely, like I said, definitely one to watch. All right, so I think that's where we're going to stop for now, but I've given you enough to go on for the day. Just remember that bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. See you in the trading room. Good morning. Thank you for tuning in to another pre-market pulse scan for trading on Tuesday, December the 6th, 2016. First of all, I want to welcome all of the new premium trading room subscribers to the weekly post-wave price triggers, your life will never be the same again. This is one of the greatest decisions that you will ever make, and you have a long road ahead of you. You'll know what each one of those means and those certain, different setups. And in the ongoing trading material, you will also see that there as well. All right, let's keep it moving. Today's rally alerts or 911 alerts under the positive momentum column, we only have a handful. We have the 20-year Treasury Bear Inverse ETF TMV, which means that we need to look and see what else is on this column. Well, if you look at the TMV, that's T as in Tom, M as in Mary, V as in Victor, you see a rally alert, also followed by under the uptrend column, excuse me, there is a 70 reading. A 70 reading means that this market is locked in on the bull side. It's in a bull market, according to the algos. And so you would do well to be taking a look at long entries. We know that this is in play, but hopefully, prayerfully, that has been cut short because all the hard work I've already done for you. All you have to do is learn how to read the weekly pulse wave price triggers and execute the orders correctly and efficiently, excuse me, and consistently. Looking at today's pulse wave price triggers, I always like to start with the alerts first, starting with the 911s, the 411s, the 311s, the 11s, the 40s, and the 78s. If you have not already done so at the time that you subscribed, even after the fact, you just have to go and look at your emails. You should have received an email with about 5 or 6 different PDF attachments. In one of the PDF attachments, I believe it's called Legends, that breaks down the alerts of the post-wave price trigger so that you'll know what each alert means. You'll know a 911 from a 40.